guys, welcome back to my YouTube channel. My name is Ngobile Shabane and this is Nuggets for Your Wallet, a place where we share pockets of tips and wisdom on personal finance. Thank you so much for clicking on this video. I know there is something that you are going to learn. I know. I've been missing in action and I have not uploaded in the past month or so. I'm very sorry about that, but something very exciting was happening for Nuggets for Your Wallet. I was actually invited by my corporate company to share Nuggets for Your Wallet with the greater business. They were running a financial wellness month and I was asked to facilitate the whole program. It was such an exciting opportunity and I was so glad to share Nuggets for Your Wallet with the greater business, and the feedback that I've been receiving has been very, very exciting. So that's why I have not uploaded anything for the past month, but I am back with full force. Just a side note, if then you need anyone to facilitate any financial wellness, I'm your girl. Just hook me up or just be in touch with me. I will ensure that I make the things happen. But that's why I was not uploading anything, but I am back and I'm very excited about the more information that we're actually going to be learning and that I'll be sharing with you. So in today's video, I would like us to expound on the idea of investments. In the last video that I put up, I made a distinction between investment and savings. It's very important for you to understand that distinction because although these two terms are very similar, they're very different. It's very important that you understand what's an investment and understand what is a saving in order for you to make the right financial decision for you. If you have not checked out this video, I will link it up here for you to go and check it out after you watch this video. But I'll just give you a line on the distinction between savings and investment. Savings is you preserving your money, putting it in a place that will ensure that it is kept safe. But investment is putting your money in a place that will allow your money to grow. So the two key words, savings, preserving. Or preservation. Investment, it is growing your money. So in this video, we're going to expand on the idea of what an investment is, what characterizes an investment, and what are the things for you to look out for. And I'll close by giving you a few examples of some type of investments that you can start looking to incorporate into your portfolio as you build your financial well-being. There are three concepts that are very important for you to understand as you explore the world of investment. Firstly, is that investments are generally associated with higher rate of return. Secondly, investments are long-term. And thirdly, the risk associated with investment is generally high. The return associated with investment is generally high because of what we call compound interest. Simply put, compound interest is interest that you earn on your interest. Say, for example, you decide to invest 10,000 Rand and the return on that particular investment is 10% a year. After the first year, you would have earned 1,000 Rand of interest. So now you have 11,000 in total. So 10,000 of capital and 1,000 Rand of interest in the first year. In the second year, when they calculate interest, it will no longer be at the 10,000. It will now be at 11,000. So now you see that you are now earning interest, not just on your capital, but also on the interest portion that you have earned. That is what compound interest, and that is exactly what really results in majority of investment to grow or to be associated with high level of returns, because you earning interest. As you earn interest, that interest is reinvested and you earn more interest. You really enjoy the benefit of compound interest if you put your money or if you invest your money for a long period of time. Hence I said investment are associated with long period. So the long period is 5 years and above. If you put your money in a vehicle or in a mode of investment for a long period of time, that's where you're really going to enjoy the benefit of compound interest. And the third characteristic of investment is that it's associated with high risk. The reason why investments are associated with high risk is because the asset or the market where the investment is made normally fluctuates. We think of your shares of the companies. They really fluctuate. You hear on the news that on the current affairs news, you would and economics news, you would hear that a share of a particular company was 110, but it has dropped to 100 rand. So all those fluctuations in the markets, because of different factors and because of different reasons, really make investment to be associated with high level of risk. But you can decrease your exposure of risk by ensuring that you diversify your investment. Diversification basically means that you invest in different areas. You don't invest all your money in just one area, meaning that you don't just buy shares with all the money that you have as an investment. You buy a bit of shares, you buy a bit of unit trust. So making sure that you have the right combination and variety of investment really decreases the level of risk that you get exposed to. When it comes to investment, it is also important that you do your research. There are a lot of scammers, there are a lot of pyramid schemes that disguise themselves as investment. So it's very important that you do your research. I mean, we live in a digital age. There is tons of information available on the internet for you to basically be informed, to be educated about any investment. And if that is not enough for you, you can also get the help of a financial advisor for them to be able to guide you as to which investment is legit and which investment is best for you based on your lifestyle and based on your financial goals. So it's very important that you do your research, and especially when it comes to investment, it's important for you to be very skeptical. Don't take things at face value. And when it comes to investment, if it sounds too good to be true, it's probably not true. When a person tells you invest 10,000, it will come back as 15,000, guys, the chances of that happening are very slim, and more likely than not, that's a pyramid scheme, and you might put your money and that whole pyramid scheme might collapse. People will tell you that, oh, I've received the return. Don't believe anything. If it sounds too good to be true, it's probably not true when it comes to investment. So make sure that you do your research, make sure that you are well informed and you know where you're putting your money, even the company or the vehicle where you're putting your money. Make sure that you are comfortable so that 2 years or 1 year down the line, you do not end up crying and losing all your hard-earned cash. There are 5 types of investment that I would like to share with you. I'll briefly go through these. I would make another video where I go into detail of each and every one of these investments. But for you to understand the type of investment of vehicles that are available for you to put your money in order for your money to grow. The first one is retirement fund. This is one of the best places where you can put your money. Majority of employments basically requires you to contribute to a retirement fund. This is a vehicle that will assist you to ensure that you have funds available for you in times of retirement. The reason why this is one of the best investment vehicle is because there are a lot of tax benefits associated with a retirement fund, but those benefits can only be enjoyed when you retire. And if you decide to withdraw your money, because there is an option to withdraw your money, there is high tax associated with you withdrawing your retirement contribution. Should you change employment, because that's the only time when you have the option to withdraw from your retirement fund. But if you decide to withdraw before you retire or before you reach the retirement age, there is high tax associated with that. So I would really advise that in your retirement fund, put your money, leave it there, allow it to grow. Especially young people like to change employment and they just want to take whatever that they have contributed from their previous employment. I advise that you don't do this. Leave your money there, transfer it into a preservation fund and leave it there to grow, and you're really going to enjoy the benefit of compound interest because you would have left it for a number of years. So retirement fund is the first type of investment. The second type of investment that is available is your stocks or your share. This is buying a share of ownership in a company. You can actually get ownership of listed company like your MTN, your Old Mutual, your Standard Bank, your ShopRite. You can actually go on the market because those share of those companies are listed, you can actually buy a share. There are different platforms where you can buy shares. Standard Bank has a platform where you can buy shares. My favorite one is Easy Equities. It is easy to use, it's friendly. Easy Equities is another platform where you can buy and sell shares, and Frank is another platform where you can buy and sell shares. So that's the second type of investment that is available. The third investment vehicle where you can invest your money is ETFs. That is exchange traded funds. Exchange traded fund is pooled investment that is invested in different companies and different assets. This pooled fund basically invests in different places, and then that ETF is listed on an exchange, like your Johannesburg exchange, stock exchange, and your New York Stock Exchange. So the ETFs are listed there, and your investment, when you invest in ETFs, you buy a share of the ETF as though it was a company. It's not a company, but it is a pooled investment that is invested in different assets. So when you buy into these ETFs, you know that you are buying into different companies and different assets. So that's an ETF. And then the fourth investment vehicle is Unit Trust. Unit Trust is a mutual fund that is managed by a fund manager like your Alan Gray, and it basically also an investment in different assets depending on the mandate of the unit trust. So when you invest in a unit trust, you're buying a unit in this trust. And the fifth investment vehicle where you can invest your money is a tax-free investment. A tax-free investment, as the name say, is tax-free. There is no tax associated with the interest, the dividend, or the capital gains that you earn on that particular investment. It was first introduced in 2015 by the National Treasury to encourage us as South Africans to save. So the benefit that you earn and the returns on a tax-free investment are really great because there is no other tax that you have to pay. This is one of the great vehicles if you're wanting to invest and start saving towards your kids' education. And you can actually start investing on their behalf in a tax-free investment account. And you can imagine if you start when they are born or when they're 5, that by the time that they turn 18, you would have really earned a lot of returns, and those returns are not going to be taxed. However, it's very important for you to remember that when it comes to tax-free investment account, there is a limit, 36,000 annual limit, and a 500,000 lifetime limit. So you need to make sure that when you say investing toward a tax-free investment or savings account, you do not exceed those limits. So there's one myth that I would like to just dispense and do away with now when it comes to investments, that you need to have a lot of money. You don't need to have a lot of money. As little as 100 Rand, you can start investing. You can go to different platforms. You will be able to invest your Easy Equities, and a lot of financial institutions have different vehicles, so it's very important for you to start with whatever you have. But as I said, do your research, understand the administration and the fees associated with your investment, so that you ensure that the return that you are getting is the maximum return, and that return will not be eaten away by administration fees. So it's very important that you do your research. I hope this information helps. I hope you have learned something. If you like this content, please leave it a big thumbs up. Leave a comment in the comment section. If you have not subscribed, please subscribe to my channel. It is free. You're not gonna pay anything. It is free. Turn on the notification bell so that you get notified whenever I upload a new video. Lastly, tell their friends that Nuggets for Your Wallet is on YouTube. Thank you so much for watching. Until next time, bye.